Hey everybody, how you doing? Welcome to Stock Markets with Bruce, my new channel. Thank you all of you out there who are already subscribing to this almost 1,000 subscriber large channel. We appreciate you coming on board, and thank you all of you giving my videos thumbs ups. I appreciate it. We talk about the stock market here, and we try to bring it to you in plain English so that pretty well anyone can understand what's going on. You're looking at a photo here of a beautiful place. If you ever get the chance to go here, this is Cadiz in Spain, and we started off with a zoom effect right from where the shipyards are, and then you can see a couple of cruise ships in the harbor, and that's the old city of Cadiz, the oldest city in Europe. A beautiful place if you ever get a chance to go cruising. The problem is we're not going cruising, and we're not going to be for a while from what I can tell you, and the news I have for you today concerns Royal Caribbean. I have an update here for those of you who have been following my videos. I've been talking about how cruise ship shares are getting diluted bit by bit because these companies have to keep raising cash to stick around long enough to wait out the shutdown. Now, over in the bond pit, the bond traders and the stock traders, they've driven a hard bargain with Royal Caribbean. But I found something today that really made me question what the heck is going on. The first part of a news announcement I read today was kind of an SEC filing. Told the market that Royal Caribbean is raising cash, $500 million plus a $75 million option by selling stock at $60 a share. Now look at this chart here. It's a one-year chart. The stock was as high as $135 back in January. Then it crapped out to $19.25 and is now in that $61 range. This is a chart from yesterday when the stock dropped $8 from the 70 range down to the 61 range. When it came out, they were going to raise a bunch of cash. Here is a one-week chart that again was yesterday. You can see it was in that 72 range and then went all the way down to the 61 range. Right now, as I'm talking to you, the shares are in around the 60, 50 range. And for good reason. The company is going to issue 8.3 million shares from their treasury at $60 a share to raise $500 million, and they're giving the brokers another 1.25 million share option at $60 a share to raise another $75 million. What is the $75 million for? The fees, the brokerage commissions, and the cost of legals to file and do the deal. This way, the company nets out about $500 million in net cash. But that is not the quirky part of the announcement. The quirky part of the announcement was in the second half when they said, yes, we're raising another $500 million on a senior note offering. I mentioned this yesterday. Nothing new there. But here's the new part. 2.875% interest is all they're going to have to pay to raise another $500 million bucks, plus an option for $75 million more. And the kicker is this: the note that they're offering is a convertible note. The holders of the note have an option, if they want, to convert the bonds into stock. Not an unusual thing, but the pricing, $82.50 a share is the option conversion price. That makes no sense to me, because if they're out there raising $575 million at $60 a share, why would a bondholder only take 2.875% interest on their money and then only have a conversion price of $82.50? The shares haven't been there since back in January when they plummeted from their highs all the way down to $19.25 a share. They reached 75 odd bucks a share in June, but not $82.50. And then it occurred to me, oh yeah, okay, I get it. If you take all these shares, by the way, it's a total of 16.5 million shares that could be converted into, all this money converted into stock. That means the company will have 230 million shares outstanding. I have a suspicion what's going on here is I do know that there's about $200 to $300 million of this $500 million note offering. They're just rolling over existing debt. And so they're only raising between $200 and $300 million of fresh cash on the bond offering. And it occurs to me, I bet you we're going to find out in the near future that the individuals that hold that existing debt are insiders, the founding family of the company. And they're just going to roll over their bonds into new bonds with an 8250 conversion because they're not going anywhere. And it wouldn't surprise me that they've added a couple of $100 million to the deal to top it up to $500 million bucks. That is what I think is happening, because no sane investor would take this deal right now with the stock where it is. I can't understand why anyone would do it, but the family who founded the company, that would make sense. Anyway, that's just me speculating. We'll see what happens. I hope you enjoyed this little quick video. I will keep an eye on things. Thanks again for joining my channel, subscribing, thumbs ups, and we'll keep you posted, everybody. Bye for now.